Hello, and welcome to another episode of Money Ministry. I'm your host, Craig Mack. Today, we're going to do a review of the past week. And, we're going to do our usual top-down analysis on the market, and I'm going to give you a forecast of what I think is going to happen in this upcoming week. All right. So, with that, I'm going to share my screen. There we go. All right. And as I normally do with you guys, I'm showing you that I am in the trenches with you. This is for the month of August so far. I know I took a week off to take care of some personal business, but I'm back now. And so far, we're off to a good start for the month of August. These are my daily, gains and losses. And so far, I'm running 24.95 that I'm up so far for the month of August. And then for the year, I am up about a little over 7,700. I've got a monthly gain of about 644. So far so good. Pretty decent given as tumultuous as the market has been. We seem to be in pretty good shape. Here, let me move this over. And so we're going to start things off with the S&P. This is the 10-year view of the S&P. As you can see, we had a little bit of a breakout here. It broke his range, so that's good. Glad to see that. You see the MACD is about at the level it was before there was a downturn. So I would not be surprised if there is another pullback on the S&P. As you can see here, the stochastic is in the overbought territory. So both seem to indicate that there is more risk to the downside here. You still have institutional buying taking place, so they're recovering. But if you see here on the volume bars, there's been a little bit of a decrease. The volume levels have come down gradually. So that is an indication of weakness, okay? Usually when there's a rally, it lasts about 3 days. Same thing when there's a sell-off, it usually lasts about 3 days before there's a reversal. So I anticipate there probably being a little bit of a pullback. I'm gonna pull up the economic calendar for next week's economic calendar to see uh, where we stand with that, to see if there is some indication of what may be a catalyst for there to be a pullback or for to extend the rally. So we'll see. We still have the Iran issue going on. Economic data came out um, a little bit better than folks had anticipated. So let's take a look at the 1 year. Here's the 1 year of the S&P. And again, it shows the breakout that took place. You can see that here. MACD is elevated. Stochastic is in overbought territory. And then the accumulation, institutional buying is starting to weaken. And again, your volume bars seem to indicate that there's some weakness starting to take place. Money flow is slowing down. Again, this is the 1 year chart, so it's a little bit shorter term viewpoint. Um, but that's what I see here, that there is some more downside that's probably going to be coming this week. All right, so now we're going to switch over to the NASDAQ. This will be a 10-year view of the NASDAQ. Pull that up for you. Again, it's a reflection of the S&P. You had a breakout that took place. See how long that lasts. You have some pretty good earnings coming out from the semiconductor segment. I think the semiconductor segment is starting to recover nicely. We'll see if that continues. As some of you may be aware, a lot of the sell-off that took place in the semiconductor sector had everything to do with the hedge fund situation awareness, that they had to unravel they had to sell a lot of stocks in the billions because of the margins calls that were due, and they had to cover and pay for the margins, the amount of money that they took out loans on in order to purchase stock. Well, they wound up having to pay all that back. And so there was a lot of stock being sold that entered the market, which drove prices down in the AI segment of the market. So that had a lot to do with it. And it didn't make sense. I mean, we had good earnings. You see strong demand for the AI infrastructure, but yet, there was a lot of selling take place. So we finally found out really what was behind all of that. It was the unraveling of the situational awareness hedge fund. All right, so getting back to the S&P, you got a little bit of a breakout. Hopefully that'll continue. Um, Looks like you might have a cross happening with the MACD, which is good. You had a cross for the stochastic, so that's good. Institutional buying is back. Volume bars showing some slight weakness. So there may be some pullback taking place, some profit taking place in that segment. But honestly, I think that it's going to pick up because your MACD here is showing some bullish signals here. Is indicating it's about to be bullish. So I would look for there to be some more gains happening in the Nasdaq and or the artificial intelligence infrastructure play. So that's the way I see it. We can go to the 1-year chart on the Nasdaq. And again, you see the breakout. The MACD is not elevated, so it's still climbing. You've got your stochastic in the overbought territory. Volume bars are down slightly. Uh, your relative strength and your money flow index are both showing some signs of weakness that may take place. So there may be a short-term pullback, but I think for the most part, I think you're going to see a continuance of the rally in the artificial intelligence space, given the recent earning reports that have come out. And I think NVIDIA, and there's still some more reporting supposed to be taking place coming out of that segment. You also have a recovery kind of taking place in your memory stocks as well, and they are a key component for the AI infrastructure build out. So I think you're starting to see some recovery there as well. So let's take a look at the calendar and see if that can give us some indication of what's to come next week. Week of the 17th. See what we got reporting here. Empire State Manufacturing, that may have something to do with people. Keep an eye on that. Housing starts. Um, what else? Initial jobless claims, yes. Um, Continuing claims, yeah, people will be paying a close attention to that. So that may have some impact on the market. And of course, the outlier being if there's any progress in the peace talks between Iran and the U.S. Regarding the Hormuz, Strait of Hormuz. Again, there's conflicting reports. Some are saying negotiations are taking place, others are saying that there isn't. So it's very tough to gauge or factor that in to the trading environment right now because we just don't know. We need some certainty. But oil prices, hopefully they won't continue to go up. They're a little elevated right now. Hopefully we'll get some movement one way or the other on that. So let's take a look at the semiconductor space. We can take a look at the stocks. This is the 10-year view. It looks like starting to recover. Looks like you're about to have a little bit of a cross here. Your MACD is starting to flatten out, and your stochastic looks like it's about to cross into a bullish position. You've had some increase in your accumulation from your institutional buyers. Volume levels, though, seem to be increasing, so it's kind of a mixed bag. Again, this is the 10-year view, so let's look at the 1 year. Maybe that'll give us a little bit of clarity. Okay, you have a hammer here, so that hammer means there may be a slight change of direction. However, here's what's interesting. Your 20-day it looks like it's about to cross your 50-day. So that's bullish. So, and then you got your MACD on the 1-year chart is climbing upward. Your stochastic is climbing upward. And institutional buyer looks like it's starting to recover. So I think all of this indicates that there is some bullishness about to take place in the semiconductor space, which was good. That will lead the AI charge. That includes the memory stocks as well as, the chips like NVIDIA and AMD. And so the demand for those chips seems to be very strong. And I've also been hearing how, even the older chips of NVIDIA are holding their value. So there's still even some appetite for some people to even buy the older chips, the Hopper chips that NVIDIA made. They're still finding some good use for them after these past couple of years. So I think that the infrastructure trade is alive and well, and I look for it to become even more bullish going into next week. Okay, so with that, that is what I have so far for you guys for this week. I hope you're having a great week, and I will see you on the next one.